Hi, I'm Ross from Coombs Smith Property Accountants in Hamilton. I just wanted to go through a simple example today of what cash flow looks like on a new build and something to watch out for, a risk which is P&I. So I'm just going to start off looking at a property. So this is just the first brand new property I could found in Papamoa in Tauranga. So this is a brand new house. It's a 3 bedroom, 2 bathroom, relatively small, 160 square meters on 325 square meters of land. So small land, smallish house on it, taking up most of the area. And we're looking at the moment that price going for 759,000. So how does that look as a rental property? What we're going to do is go through the numbers. So yeah, it's a Papamoa new build, 759,000. What is the realistic rent? Well, it's a brand new house, so we'd expect to get 52 weeks of rent, but really good idea to talk to an independent property manager and get an idea of what is the demand for 3 bedroom houses in that area. Is there lots of tenants and what sort of rent? So I've based this on a past property appraisal that I've seen that maybe you can get $600 a week, but really important to talk to a independent property manager. Always talk to someone separate from the sales company and completely away from that. So this property, 31,000 in rent, divided by the 759 purchase price gives us about a 4% gross yield, which is about the normal at the moment. It's not fantastic at all. You then got all the different expenses. So we've got in there insurance, we've got interest at 2.49%, so really low interest rate, property management, some rates, some repairs. Maybe you do a little bit of property education or join your local property investor associations, such as Waikato Property Investors. 31,000 income in, 29,000 out, you're making about $2,300. The problem with this, my expectations are on the right over the 10-year, sort of a conservative guess. So I'm expecting rent to go up, interest rates to jump up, all the expenses to jump up as well. And we're looking at maybe moving to 5,000 negative. So this property sort of looks okay to start with. It's making some money, but if you're looking at a long-term picture, it's likely to be negative cash flow at some point with interest rates going up. We then get large chattels depreciation on this property. So that will turn it from a profit into a loss from a tax point of view. So there would be no tax to pay. With ring fencing coming in from the 1st of April 19, that loss will just carry forward year after year after year until you've got some other property making some profit to offset it. So a lot of people are looking at these sort of properties and yeah, it's making a little bit of a profit there. The big risk is what happens if you have to go on principal and interest. So if you go on principal and interest over 30 years, you're looking at losing 14,723 per year. If you break that down to month, and yeah, you can break it down further into a week, but you're going to have to pay a lot into that. Sorry, that's actually not the right figure. If you break it down into weekly, that's $283 a week you would have to put in to pay that 14,723. Yeah, effectively cash flow shortage if you went on P&I. If you wanted to do it over 25 years, which I've just seen on a Facebook forum, you're looking at 19, almost 20,000 loss. So be very careful with these properties. Think long term. What is this property going to work like for you long term? What's the cash flow going to be like? And if you're forced to go on to P&I, can you actually do it? What happens if the bank makes you do P&I? So hopefully that's given you something to think about and yeah, given you a little bit about that risk of possible P&I and what a bank might do. So hopefully you enjoy your day. And yeah, if you're wanting to have a chat with me, there'll be a link in the bottom. Just organize a free chat with me for 5 or 10 minutes. It's great if you're looking at, yeah, buying a property. Is the property actually good for you? What structure? Or should you buy it under a company, an LTC, a trust, or something else? And just some good unbiased information about whether it's right for you and what you should be doing. So thank you very much and hope you enjoy your day. Thanks.